The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, folks. Basil Chapman, Tiger Technicians Hour. Great show with Tom and Daryl. Really terrific stuff that they discussed. And, of course, Daryl demonstrated once again his prowess at this particular technique of using diagnostic trading. And Daryl will be back a little later on. I think 1 o'clock he'll be back with his show. And don't forget, straight off to mine, you've got health with Nico and Paige, and they talk health, and it's really important. Very big coincidence here. Al, a wonderful engineer, usually plays some music during the break between shows, which you can hear in the den, but you won't hear it out there. And this morning he started playing some music, and I thought, gee, this is really interesting. Turns out he was playing Charlie Parker. He never plays Charlie Parker, a wonderful saxophone player. And purely by coincidence, a friend of mine just gave me a book to read, Kansas City Lightning, The Rise and Times of Charlie Parker by Stanley Crouch. This Stanley Crouch, I'd never heard of him before, but he is an author. He's a lecturer down at one of the universities down south, I believe. And what a fabulous author. He just gets right into this, gets into the heart of these folks. And writes about Charlie Parker. I'm only 50 pages or so into it, but he has been everywhere. Then he gives you history. And it's really an outstandingly well-written book. And I can't say I recommend it yet. I recommend it based on the first 50 pages. Of course, you should finish a book before you blab about recommending it. But I have to say that Stanley Crouch has been writing about jazz music and American experience for more than 40 years. He has twice been nominated for the National Book Critics Circle Award for his essay collections, Notes of a Hanging Judge, The All-American Skin Game. These other books include Always in Pursuit, The Artificial White Man, and the acclaimed novel, Don't the Moon Look Lonesome. Since 1987, he has served on and off the artistic consultant, there it is, for jazz program at Lincoln Center, and is founder of the jazz department known as Jazz at Lincoln Center. President of the Louis Armstrong Educational Foundation, is a recipient of a MacArthur Fellowship, a member of the American Academy of Arts and Sciences, regular columnist of the New York Daily News. Wow, nicely written. And he must have been a musician as well, because he really understands the music. All right, so we've got the Dow up 45. It was way... it starts off, and we've got a move down. Oh, there it is in the den. Boy, we have fantastic folks here in the den. Peak D writes, famed trumpeter Wynton Marsalis, this is of the Marsalis family from New Orleans, who is the head of the Jazz at Lincoln Center program, has called Crouch my best friend in the world and mentor, causing some to describe Crouch as the Eugene Landy of jazz. Anyway, so it's worth getting into there. Now, yes, good point. Al says they'll hear the music in Tiger TV and on Moby as well. You will hear it. Of course, I remember that. So the Dow's up 42. Now, let me just tell you, at 8:30, look at the E-minis here. Here's a 120-minute chart. What if I could get the 2-minute chart here? 2-minute chart, ESH 14. Yeah, look at this. This is the 2-minute chart. Look what happened. It's chugging along very nicely, and then out of the blue comes this report. There was a spike to the upside initially, spike to the downside initially. The E-minis go down to 1759, then 1758.25, but they were hanging out in the 1773 area. Spiked up. I didn't see that spike to 1786. I'm not sure it spiked up first or second or whatever happened. But anyway, what a range. 17, 1786 to 1758. That is a 30-point spike. That is unbelievable. And then what happens? It goes, let me show you something here. This is a 2-minute chart. Remember we did this, was it yesterday? Time flies when you're having fun. Peak A, peak B, peak C, peak D, and then goes to A, right there, B, C, and another D. Remember what's the objective in the Chapman wave methodology? The objective is to get you from a buy signal to at least a D. That's where you got to be careful. Well, wait a minute. The last D, which was at 1783.75, pull back to 1775.25. Now it's bouncing with an A, B, C. So we should see a little bit more, and then you can hit resistance at the 1778.75 area. So the Dow, let me go through the numbers. The Dow is, let me just get this a little bit bigger so I can see it. The Dow is up 45 at 15,674. The S&P is 8.80 at 1782. The NASDAQ Composite Index is up 33 at 4090. Now what's interesting is gold wiggled around, but it's still up, and let me just show you something here. It's really worth looking at this. Now, one thing I forgot yesterday, was, I'd written it down about 10 times. Warren had asked me, could I please show the DXD or the STS? Darn, and I ran out of time. It went right together with many other things, and I'll show it. In fact, I'm probably going to forget again. So let me just show it. No, let me finish this. The E-minis went to the 200-period exponential moving average. For my subscribers, every morning I show the E-minis, the daily and the 120-minute chart. I show the analysis with the Chapman wave methodology. I show the technical aspects that are very important. I show the support levels. I also discuss what potentially could be a target to the upside or downside if certain aspects are hit. And I said that this orange line, this goldy orange line, the 200-period moving average at 1784 would be an upside target. Lo and behold, it's 1786 and then pull back, and holding now the 9-period exponential moving average support at 1772. Now, the reason why I wanted to talk about that sport, I was just about to go to gold. Gold is acting very, very well here. GCG 14. Look at this. I've got to hit the right place. GCG 14. Look at this. The 9-period moving average has just been fantastic support the last few days. Even today, it should have pulled back underneath 12.55. Instead, it hasn't even gotten close. The low so far today is 12.57.90, and it's holding above the 9-period moving average. The MACD's okay. The stochastic's not good at all at 53%, but it is rallying. So this is saying price is a determinant of trend. That's what I always say. And at this particular point, it's holding very well. If at any point gold, the contract itself, closes under 12.53, I'd say 12.52, probably 12.52, then you're going to see a quick test of the 12.40 to 12.38 level. That's the way I'm looking at it. But as long as it holds here, this is very nice action. Silver is disappeared. Silver is, let me go to this particular instrument right here. Oh, there it is. Silver is at 19.94, up 0.01, and you've got crude oil at about 98.22. It's just kind of stuck there. Now, bonds are up a half a point, and I wanted to discuss that now. I'm going to do that together with the SDS and the DXD and the VIX index. Dollar is down 17 cents at 18.83, and the euro is just slightly up. Now, let me show you something. The question I had was a great question. Why? Because if you look at the DXD, that's 200% short the Dow. I could have gone to the DOG, which is 100% short. It has made a peak F top. It made it during the day yesterday. That's what I meant to talk about because I did the TL, one thing at a time. Peak F at 31.77, 200% short, and it says, hey, be careful. There could be some kind of a pullback here. 3 days, maybe 5 days. We've already had 2 days, so there could still be another few days left. Now, most importantly, look at the SDS. Peak E at 33.34. And the high was 33. 0.34. That high got a reversal at a peak E yesterday, confirmed, but the MACD and both the DXD and the SDS are still very strong, and the stochastic is at 77 or 78%. So putting it together, the most important aspect that I can talk about, and one that I'm going to make a big deal about, as always, is the VIX index. Look at this. Peak C plunges from 2148 to today's low of 15.58, trading right now at 1585, right on a very important moving average support. But most importantly, that moving average support is liable to go in the next couple of days if the low is taken out of today, because 1473 will become the 200-period exponential moving average. Not the issue. This is the issue, and I wanted to make a big deal out of it. I sent, for my subscribers to my opening call, I sent this. It might have been a little bit later. It was after my Traders Corner went out, so maybe you didn't see it, but it's worth going, spend the weekend, just check it out. This is really an important chart that you need to look at. It's the weekly volatility index, the VIX index. Now, in this particular chart, what we're looking at here is there was a major high. I should have typed in what it was. I had it typed in. I had to redo it. Then forgot a 48 round number. I remember that so well. I made a big deal about the 48 round number high way back in 2011. Red. And then what happened, you started a series of U patterns. These are like capital U's, not the little lowercase u. This is uppercase U. Why? Because they're very deep. It's not like a bowl formation. It's like a deep U. And what happened is the first one went down to 13.36 in 2012, and the VIX then rallied to a peak C minus right at the resistance on the left side of this candle right here, of the candle of December the 16th of 2011 at 27.73. So what does it do? It goes to 27.73 exactly. I always have to wonder, this is a volatility index. This is not a price of a stock or an index. This has got, it has no clue as to what previous levels were. How does it stop at exactly that bar? Anyway, pulls back to 1330, back to the 13s, then rallies again to a peak C minus because it fails at 23.23. Should also put the date, 23.23. And look at these lovely numbers. Look, 27.73, 23.23. Then what happens is pulls back to 11.05, lower high, lower low. And then it comes back to the 11.05 level, and it goes peak ABCD. But it looks like a great rally, except all it's done is it hit that trend line to the downside, that inside track sell zone, goes to 21.91, pulls back to 11.83, then it runs to peak A, peak B minus at 21.34, back on the October of 2013, runs to 11.69, and now it goes up to peak B. I'll discuss this when we get back. Basil Chapman, Tiger Technicians, Hour 877-927-6648. Give me a call. Dow's up 550. S&P's at 9.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We are back. Just let me quickly get back. Okay. Now what I'm talking about in the VIX index, so this is $VIX.X. That's how I get it on TradeStation. And what happens is you keep making these U formations. Only once did you go to a D. And that was from a lower low to a lower high within that trend line. And look what happened. We spiked way above that trend line this week. We went to 21.48. Well, the 21 area is the same as the 13 was before. It suddenly broke to 12 and 11. It was a support level. And all of a sudden, you've got the 21s breaking out. But you know what? Today's Friday, and Friday at 4 o'clock, if we close anywhere in the 15s, it's at 15.79. We've got another one of those failure patterns in the 15 to 17 bar, that's 15 to 17 week cycle. And that says that there's no way that I can dismiss that. You remember yesterday we had a question, we had Freeman calling, and he wanted to know about the UVXY, which is one of the many trading vehicles for the volatility index, which we had traded in my opening call very successfully. We made one position made about 37%, another one made about 27%. We got out a little early, but it was still a fabulous gain. Look what's happened. That UVXY is trading at 74.87. It hit 108.41. What a 30%, 108. Did I say 31, 41, 41, I think. Look what's happened. 74.82. This, in fact, is an island reversal in the VIX. I cannot deny that that is tremendous weakness in the sentiment. In other words, the selling pressure has completely been alleviated and the buying pressure. So when Freeman called in and said, what about the UVXY? It was trading yesterday somewhere, I think it was somewhere in the 90, maybe 90 to 80 area. I don't remember exactly. But, well, I could look it up. But what I said is don't touch it because it's pulling back so sharply. Let's just wait. Well, thank goodness, because look, overnight, I mean, it gapped down so that even if you wanted to get out this morning, you had to wait for the actual play to be able to get down. So now I've got no choice but to look at this. And this is the chart. And the question that he brought up, is this a pullback of which we're going to see a rally to the upside, and maybe was that like a buy signal or something? Is it going to be a much stronger rally? And I said, at this particular point, I'm still looking at the overall picture saying lower highs and lower lows. But on a shorter term basis, the doji candle that was made in the Dow yesterday on the 5th, 2 days ago, on the 5th, at 50,340, that candle there with a fractional lower low than the 75,356 low, I have to tell you that the candle of yesterday was very, very strong. It's the kind of candle, look there, a doji candle and then a powerful move. The next day is maybe a doji. But I just have to tell you, if Monday, today we had a triple-digit move up. The S&P was much stronger, which makes me furious that I tightened the stop just by a fraction too tight in our 300% long. We went long about 3 days ago, maybe now it's 4 days ago, in the 300% long the SPY. That's just the way it goes. But what's most important, and this is something that I cannot rule out, is that in looking at the Dow, the takeoff pattern that we're looking at here with that 9-period exponential moving average being challenged right now, that's at 15,600, and we're at 15,000 in the Dow, 15,688. I have to look at this and say, you know what? There are enough oversold stocks that this could be a much more, this could be a rally of time and maybe price. I cannot rule it out. There were certain stocks that I tried to buy in the last day or two, missed them. They just took off like rocket ships. Now that says to me, don't get so focused on your overall look at things. Concentrate exactly on what the charts are telling you. And the charts are telling me, let me move this away. This is what my subscribers get. They get this chart. Those are the comments for today. The S&P in the morning just collapsed. The futures spiked higher and then pulled back and then had a beautiful run to the upside. And now we're looking at almost all the sectors starting to participate. One in particular just took us out of the only short position we had. And that's going to be something that I have to watch really closely. Now look at this. I love this particular chart pattern. Look, here it is. I show this every day. This is my overview. Now you see this kind of oval formation, and that's only because the Dow Industrial 120-minute chart is at the top, and the VIX 120-minute chart is at the bottom. So they come together, and I said, deflect away from the oval. That's the oval, and that's what's happening. So I'll be back. I want to discuss the pros and cons of this market. Be right back.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi folks, Basil Chapman here. Dow's now up 64, S&P's up 11. This is really very good action, good strong action. Now there are a couple of things that I said. The volatility index I'm not going to discuss now anymore. I'll do it again Monday. Let's see where it closes the week. If it's under the 16 area, in the 15s, I just have to say that that's a positive. There's buying pressure, not selling pressure. Let's make it simple. Now, the question, I think Jay had asked me in the den about Facebook. Facebook's in leg C to the upside, 64.09, up 1.93. Great action, great gap, and a nice breakout above the gap for almost every day since then. This is nice action. This is leg, I'm calling it leg C in the weekly chart, leg C in the monthly. Facebook is definitely the stock of 2012, at least the first part of 2012. It's acting really well. If you're long, stay long. I would say 61, a close under 61 says, okay, some kind of a consolidation is going to take place. That'll probably be after leg D. At this point, it looks real good. And the weekly chart, technicals have improved since it pulled back down to the 44 area. And the monthly chart says it should still make a leg D at least. Next question was, could I follow up on JO, which was that was the coffee contract. It is the iPath, Dow Jones, AIG Coffee, ETN. Now, this is very interesting. I said, if anything, we'd expect a high-level consolidation. So I don't know yet whether it's an E or an A, but the stochastics at 89%, that's very good. Daily chart, the MACD is still expanding, and the histogram is still improving. But on the weekly chart, you've had a leg D with a pretty significant pullback from the high on the bar itself. So it went to 28.74. It's at 27.68, up 89 cents right now. And the monthly, so leg D in the weekly chart above, making the support at 27.87, the high of the week of the 19th of July of last year. Quite important, but it's really not that. Most important, I just want to show the weekly, the monthly is in leg A to the upside. Most important is the 26.13 to the 25.28 level, and that would be the consolidation area. This is acting very well, but it looks a little bit tired. It's completed a spectacular move, and it's consolidated at the highs. The actual contract, the coffee contract, the March contract, is acting just fantastic. It looks like if Monday it takes out 144.15 and it's at 142.75, I must just consider that is very likely not a leg F but a leg B, and that coffee will be going higher. It's held 9 periods. Look, I love these things. When you start using a particular technique, they use it over and over and over again. You're actually shocked at how many times certain levels are hit to the penny. Look at this, 9-period moving average. Exactly, it's at 132.40. What was today's low? 132.04. So it went 132.40, huh? 132.35, sorry. And it went just a tad underneath it to 132.05, and now it's trading way up at 142.25. I love this action, and I've got a peak. Oh, man. So that's a peak G in the 120-minute chart. Oh, I can just tell you that if it doesn't double top, but it takes out decisively the doji candle in the 120-minute chart of 144.15, in other words, if it gets to closes above 145, that's a lot, huh? 144. Yeah, no, it has to do that. If it closes up into the 145s at all, anywhere above 144.90, that it closes. That's going to be really important. That's going to make it raise the base of support. Very nice action. So stay long. You should still have at least part of your contract there, if not the full core position, having taken off a little bit, just because that's money management. I love that. That's great. Now, that was the question on coffee, and that's looking very good. What was the one? Another one? Netflix. Netflix in leg E. Okay, Netflix. It's funny. I had it all set up. I can't believe it. To buy a call position in Netflix. Not just yesterday, but the day before. I thought Netflix is acting so well. It was in the 406, 407 area. But I looked at the options. They were not cheap. I love for my subscribers when we can pick up a nice cheap option. And if that's the case, then what we're looking at, that would have been a very nice, I didn't do it. So talk about history, water over the dam. It's at 424.76, breaking out. I don't know if this is an old leg E or a brand new A. It is fabulous action. The weekly chart is broken out, and the monthly chart is in a very strong leg E. So there it is. Netflix is one of your leaders and is acting very, very, very well. So now that's let me see what I wrote down here. I wanted to talk about this. There are a couple of characters in the general market who have companies that have been real winners. Benioff, the guy from CRM, and that is Salesforce.com, is one of them. He's a great talker, and he's a great executor. There's no question. Look at the chart of Salesforce.com, trading at 61.70, unchanged right now. But it's a leg F, huge leg F. Maybe it's even recycled, but I'm calling it F for now in the monthly. But there are no technical divergences yet. The weekly chart is in leg E. No divergences there. It's looking very good. And the weekly the daily, has just broken out and is looking very nice in leg G/B, and I'll probably have to say that it's a B because it's acting so well. That's the first thing. There's another stock, ATHN, Athena Healthcare. It is trading right now at 171, up 32 points. Bush, I can't remember what his first name is just a fantastic talker of the company. He just, every once in a while, he misstates things, and that always upsets me. But in fact, he has produced the goods, and they are in the right area. Electronic medical records. These are the physical office systems. These are the way of getting all that data and helping physicians in offices, helping keep records. It's just a great record company, and they're the leaders in the field, Athena Health. And look what's happened. Now, we almost went short the other day, and then a subscriber said, wait, they've got earnings coming out. Thank goodness we didn't get short. We were out of the stock completely. It really looked from that peak E that it was about to pull down with a number of other stocks. Didn't do that. So it spirals up, and this is either leg F or, like what we were looking at a moment ago, this could be a brand new A. So this is something that you've got to be aware of. You've got some stocks that are acting absolutely phenomenally. And then you've got some other stocks that are acting very poorly. Like, let me just put this in here. This is D, and it pulls back. Like Twitter. And Twitter, they aren't able to talk it up, and they aren't able to, so far it looks like they aren't able to execute. That's number one. Number two is that we've got Facebook, and I think that he's learned. He's a smart cookie, Zuckerman. And what he has done is that in the beginning he misunderstood what was going on. It just wasn't his area of expertise. You could see he was totally bewildered when his stock was going down. And then out of the blue, he just learned about it, and he learned it so quickly. Now he knows how to talk it up. He knows how to produce the goods. So Facebook is absolutely going to be, I suspect, in that category of leaders that know how to walk the walk and talk the talk. And this is something I'm going to be watching real closely. Why? Because in this particular phase of the market right now, what we're looking at is a situation where if you have leadership and that leadership keeps producing, it gives great confidence in the market. And Zuckerberg. In the den, Jay says, Zuckerberg studies psychology. He understands the game. Yeah, it's not that. A lot of people understand. It's how do you execute? How do you learn, absorb it all, and in a company as big as that, then produce the goods? And I think, I don't know. I'm just thinking out loud here, that I think he's producing the goods. Look at the weekly chart. It's just made this U-turn. It opens up at 42.05 on the in May of 2012, runs to a high of 45, closes near the round number low of 38, and then plunges to 17.55. And now what it's done, it keeps making these stair-step moves, and they're getting quicker and quicker, and now it's made like almost a cup and ladle breakout pattern, and that breakout pattern is acting really well, 64.39. So I'm going to keep this as a focus for my subscribers. We've owned it just very briefly at different points, and that's just stupid. If you've now got a leader, now you've got to look for decent pullbacks to maybe start considering a different kind of a position that says, you know what, over the period of the year, this is leg C in the monthly, it should still make a D regardless of how deep it might be pulling back at any particular point. So I wanted to just go through that, kind of thinking out loud, giving you some sense of leadership and what it means and how you can best use it. I just received an email from someone who I've actually played chamber music with. She's a very fine violist. She's a physician, and it's going to give a talk. And I thought I'd just mention this. Why? Because I think it fits in. Tom has a program Wednesday nights 6 to 7 with Ali, and they talk about it's really your mental health. But straight after this, we've got Nico talking about your bodily health as well as your mental health. Well, this is a very interesting thing. She's a musician and a physician. I believe a pediatric physician, but she's been working really hard at the relationship of really the mind and music. She's giving a talk on Tuesday night. I don't know if I'm going to be able to go. It's at the Paul S. Russell Museum of Medical History and Innovation at 2 North Grove Street, Boston, right off the Red Line, Tuesday evening, February the 11th at 6 o'clock till 8 p.m. This is Dr. Lisa Wong. Prescription, music. It should be fabulous. I've heard it talking about it just when we were having dinner once after we'd been playing chamber music, and just fabulous and fascinating. She's she's a visiting scholar this year, having taken a sabbatical, visiting scholar of the arts and education at Harvard Graduate School of Education. So it's a talk on reflections on music and medicine. So I thought it just might be interesting to mention it here because it just kind of fits in, I think, into the realm of what we like to be talking about here. So let me do a couple of other things here. Look at the IYT. The IYT made a peak at 135.93 in the Chapman wave. That's the iShares Dow Jones Transportation Average Fund. And it went to 135.93 in a peak F. It gapped down. There was a 133 round number open. Gapped down, plunged to 125.70. And has now made a leg A. I call it a gray A because it's under all the previous resistance points still. But most importantly, the weekly chart is saying, hey, you can rally here, the chart technically, to improve. Now, it's almost like a one-to-one on the upside of the 9-period exponential move. So you've got your midpoint right there at 130. You've gone to the upside to 135.93. Let's call that 6 points down. And you've gone from the 130 area down to the low this week of 125, 5 points down. So 5.5 points up, 5.5 points down. And it's right there. It's under the 9-period exponential moving average. And then it says, okay, wait a minute. That's the weekly chart with weird, the technicals are very poor, but the price is holding. Let's look at the monthly. And lo and behold, the monthly is saying, I'm in the process this month of possibly making a peak D if I do not go above 135.93. This is the IYT. But 123 is the 200-period, the 9-period exponential moving average. The stochastic's at 94%, and the MACD is still very strong. That, in essence, is saying that the transportation index is still holding really well. And if that's the case, until it breaks the low of this week, which was 120, what did I say? It was 125.50. It's saying high-level consolidation unfolding. So I'm going to be watching that. Not that I really believe in the Dow theory, because it has a mixed, it really has a mixed record. But I'm saying this is good action. I'll be right back. Dow's up 80.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Hi, folks. Just finishing up a couple of charts here. I had questions about the 120-minute chart on the, let's go through one at a time. QQQ, 1, 2, 3. QQQ is the Power Shares QQQ Trust Series. Leg C above the 200-period exponential moving average in the 120-minute chart. Stochastics at 92% and the MACD is very strong. That is good action. Says you should go to at least a D, and the upside target would be this candle right here at 87.60. It's at 86.79 right now. It's about a point away. That would be the first real resistance. The very ugly candle of the 24th of January from 88.18 down to 87.10. That, if we break above 87.60, then you're into that candle in a good way. Support is at 86.19. That is the 200-period exponential moving average, to 85.82 if there's any sudden. Now, I don't know what bad news there could be right now, because we've just gone through what could have been the worst news. And the candle that's forming in the, I had drawn this earlier, in the Qs, in the right there, in the weekly chart, had a kind of a cup formation. So I'm really watching this real closely, because a recycle could be ABC, and this could be a G/C, and this could turn out to be a D if there's a new high above 89, round number high. So I'm watching, because if it's going to break down, it'll be Monday afternoon to Tuesday morning. It has to go into 85, 88, and that's leg A, gray A, I call it, in the retracement in the daily chart. Whoops, there it is. And where did it hold? Right there. So it just got to the 84.05 low That was the 18th bar of the correction back in the 18th of December. So far, very nice action in the Qs. Let's go to the IWM. That's the Russell 2000. And, we've got a caller. We've got Nick in Oklahoma City. Hi, Nick. How are you?
I'm doing fine, Basil. Good to hear you.
Yeah, good.
All right. MCP.
MCP?
Yes.
Okay, that's Monaco. Let me.
In David White stock.
Yes.
And,
great action today. Did you buy it this morning?
I actually bought it a few days ago when it was kind of hovering down. Yeah.
Okay, so this is what I'm going to say, folks. We're looking at Molycorp, molybdenum, and I believe that's what they're in. It's at 503. It's up 32 cents, up 6.79. It's above the 200-period moving average in leg C in the 120-minute chart. I like this very much because of that inverted V pattern in the weekly chart. But two things have to happen. If you've got it, I'm going to suggest to you, watch the candle of 5.04, that was on the 30th of January, if it's able to take that out by Monday afternoon without sliding to the 4.83 to 4.79 level. That's going to be really good action because what it does, 515 is the weekly 9-period moving average. So congratulations on a fantastic entry point. What I'm going to suggest to you is if you can keep what you got as a core position, I would probably say try to keep that core position, and you can add to it on a pullback to $4.93 to $4.87. But that position that you add to has to move very quickly to the upside. And if you add to it and it goes above 505, then make a stop on the new position of about just a little above your entry price, because that will allow you some room, and then you got your core position, because there is a chance that you pick the exact double bottom area for this to have a very nice rally. And if that rally succeeds, molybdenum MCP could go to the 520s. Congratulations, Nick. Great entry point, and that would be the trade that I'd consider.
Thank you very much.
Have a great weekend. Thank you for calling. It's folks, Basil Chapman. Don't forget, my service is the opening call. You can get it for 2 weeks free. Go to the front page of TFNN. And the Dow is down at 94. S&P's up 14. Stay tuned for Nick and all the great programming.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
You're watching Tiger TV.